Good day, everyone, and welcome back to Quest for Alpha. I'd like to start by saying it clearly that these weekly updates are something I primarily do for myself. I document what I'm doing, what I'm seeing, and how I'm thinking, not to predict the future, not to impress anyone, but to stay honest, structured, and accountable in my own process. And since I'm doing it anyway, I decided to share it. So please don't expect any hype. There's no real signals here, just real-time thinking, real decisions, and real outcomes as they unfold. So what I'd like to do today is do what I typically do during my weekly updates, and that is to go through some of the active trades, what has transpired over the last week, and then we're going to go open up the Excel spreadsheet and take a look at the portfolio. Before I start reviewing these trades, I'd like to provide a brief explanation of the strategy, which is all over the channel, and I can link a video where I go into a little more detail. But let us take a look at, for example, Prudential Financial. What I do first in my step number one or filter number one is I confirm that the stock is trading in an upward direction. And I do that by utilizing three EMAs, the 10, the 100, and the 200 EMAs. And they need to be stacked on top of each other, such as in this case over here. Once that is confirmed, then I wait for a pullback. I wait for a pullback to come to a demand zone. In this case, this was a demand zone that I had identified, and the reason for that was because there was one bearish candle and pretty strong bullish candles consecutively being formed that have taken previous high. In this case, this was the high that was taken out. So again, filter number one, make sure that it is in an uptrend using the three MAs. Filter number two is wait for a pullback into a demand zone. In this case, this is the one. And then we do not take trades blindly. What we do is we go to the daily time frame and we wait and we observe for a confirmation. That confirmation happens when there is a consolidation that occurs somewhere between the 200 and 100 EMA. It can be on the line itself. For example, you can see that there was a consolidation here, and then there is a candle that broke out of that consolidation and closed above the 200 EMA. That would have been a clear signal for me to enter the trade. However, I wasn't participating during this time. So instead, what I had was something else here. And there was no clear consolidation in this region. There was a consolidation here, minor one, but the candle, the price never really broke out above it. The price came down, came back up, and there was another consolidation that formed this region. This showed that there was a momentum, that the price action wanted to move higher. Then we have a very strong bullish candle that went above it, it closed, and then at that point, I entered the trade. Now, in this case with Prudential, trade management can be done in many different ways. The way that I prefer to do it is oftentimes by placing a stop loss below the consolidation and aiming for a 2-to-1. So that was an easy 2-to-1 target. And then after some time, you can see it went even above it, came down, went above it, and as of Friday, it dropped significantly below. So hopefully that gives a little bit of clarity about the strategy itself. Now let's go back to the active trades and take a very quick look at how things moved. So Dover did pretty good, continued trending upwards, getting very, very close to a 2-to-1. So we can actually set an alert here. Once that happens, we will take 50% off. Corteva is also doing well. It's going in an uptrend. And the price had actually moved maybe slightly above last week. So not a major push. CNA, this is the one where I said that if the price decides to close below this line that I would get out. That happened actually on Tuesday of last week. And Unfortunately, it was a pretty drastic move down. I got out. You can see that the price actually bounced off, but rules are rules. So this was a loss. Cart was something similar. On Monday and on Tuesday, the price was still fighting. I was hoping that it was going to start going higher. However, it did end up closing below the day, and I decided to get out towards the end of the day on Wednesday. And you can see that was probably a smart move because the price dropped even more the following few days. With that, CNA and CART are going to be moved to previously closed trades section here. CPay, we had a pretty significant drop on Friday. It's still in profit, so we're still interested, and we're going to continue to be actively engaged and involved with this trade. Ingersoll Rand continues to move higher, which is great. TransUnion has been struggling. It's still in the negative right now, but I'm really hoping in this coming week we are going to see some profits here on this stock. Ares was somewhere. Where was it? It was up in the positive, dropped down to almost break even, and it's just slightly in profit as of Friday. So we're going to continue to be involved with this stock. Now, the next two were TDG and TDY. These were previously on my watch list here that I have shared with everybody. They were on, one of them was on the short-term setup and the other one was on the long-term setup. And you can see that the price actually did very well on TDG. Now, this was on a Wednesday. Tuesday is when it triggered. Basically, that candle closing above the previous high, previous consolidation. There was a consolidation here in this area and a nice move higher. I could have entered here. However, I was traveling during that time due to the holidays, and I missed looking at the watch list and identifying this potential play. Regardless, this is an example that I wanted to show you all that was on the watch list, and it could have been a great profitable trade. And TDY was another one very similar that also did very well on a Wednesday. So Tuesday, this January 6th is when it triggered, and one would have entered on a Wednesday. And you can see as of last week, we already reached a 2-to-1 risk to reward. So with that, some of the other trades that had already achieved a first target of 2-to-1 was Prudential that we just looked at. That price actually dropped. Waters Corporation has been consolidating, so not much there. Merck has also been consolidating, still in an uptrend, still doing well. Regeneron dropped a little bit. Vertex actually dropped significantly. And it's very close to the break-even point. So I have not closed all my position on VRTX because I am going to be pretty strict here. I'm going to monitor. You see, I have an alert level. If the price actually comes here and perhaps closes, or it's very close to this region, then I'll probably take out all of my investment from VRTX. ALSN, that actually continued to move higher, which is great. APO is consolidating pretty much where we were last week. And then FCNCA has been consolidating as well. All right, that's great. Now let's move over to our portfolio. All right, so in the portfolio, as you may already remember, I have three tables. I have the active balance table. I have the realized profit loss table. This is when we follow the strategy that I was just talking about, where we take 50% off once it reaches 2-to-1, or if it reaches the flexible stop and loss, and then I treat that as a actual loss and I record it. And then the realized profit loss, this is a little bit of it has a little bit of a stricter rules. This means that I exit a full position once my target reaches a 2-to-1. So I don't wait for it to go either above or to come back to the break-even point where I would close my position. Or 2-to-1, I claim a win of 2. Now, I don't want to go into too much detail here. I explained the last video how I do this. I can just tell you that compared to last week, this past week, we did not perform as well in the portfolio. You see, actively, last week I reported a 12.17 risk to reward. As of today, we're around a 9. And if we take into account the realized profit loss, last week we're at minus 2.6. As of today, Saturday, the 17th of January, we're at minus 4.2. So if we decide to cash in everything, we would be around 5 risk to reward. Now, this is since November of last year. So in a 2.5 months, we have a 5 risk to reward. And then if we wanted to just follow the very strict approach, realize profit loss, where if the target reaches a 2-to-1, we take out all of our funds. And if it reaches the flexible stop loss, you can claim it as a loss. Over there, we're at 1.8 or almost 2 risk to reward, which is also not that bad when you think about it. If you have invested $100, you're now sitting at $180. And obviously, the larger the funds, the larger the risk you've taken, the larger the gain you would be getting. So I'll wrap it up here. Again, this isn't about being right every single week. It's really about staying consistent, about thinking clearly and letting time do the heavy lifting. If this way of documenting and sharing resonates with you, then feel free to stick around. And if nothing else, maybe it'll encourage you to build your own process, whatever that looks like. Thanks for watching, and I'll see you in the next update.